I want to talk about trading with the major trend today. That's a trend following system we've been using for many years, and it kind of gives you the big picture of a stock and its performance. And we like to go back 20 years with all our charts, and we like to identify stocks that trade really well over the years. They have very low volatility, very few sell signals, very few whipsaw trades, and they still manage to outperform almost all market sectors and all stocks. So those are the stocks we like to focus on because they're less risk and there's less chance of getting stopped out of these stocks, whether we buy the call option on the stock or the stock itself. So this is a great way to profit with lower risk. So today we're going to look at the major trend system, and we're going to identify stocks that have outperformed the major averages with less volatility. And we're going to look at a few strategies that we use the major trend system to identify trades for these strategies. So we'll look at a dividend strategy, a married put strategy, and an option strategy, and I'd be glad to have a Q&A session at the end. So the goal of the major trend system is to identify stocks or ETFs with the best long-term performance and price patterns, and I'll show you what we mean by price patterns here in a minute. And then we use a short-term indicator to help time our entry into a trade, whether it's a stock trade or an option trade. We have a short-term indicator that we use to get a low-risk entry. So the major trend system is a long-term system, and we like to look at the long-term trend of a stock, but then when we actually enter the trade, we like to use this short-term indicator to help us time our entry. So when we use the major trend system to identify the price trend of a stock, that allows us to trade with the trend instead of trying to predict the future price movement of a stock. So we're trend followers. We believe in following a system rather than making emotional decisions, and we simply follow the trend. And the major trend system uses the 1-month price of a stock in relation to its 20-month exponential moving average. And that's an excellent way to identify the long-term major trend of a stock. And these indicators are easy to download off the internet. And the system itself is pretty simple. If the 1-month price of a stock is above the 20-month EMA, then a bullish trend is indicated. And if the 1-month price of a stock is below the 20-month EMA, a bearish trend is indicated. So pretty simple stuff. Now we only look, when we're looking at the major trend system, we only look at the last trading day of the month. So if the last trading day of the month is March 31st, then we only look at the price on that day. And we compare that price on that day to the 20-month EMA. So if the price of the stock on the last trading day of the month is above that 20-month EMA, that's on a buy signal. And we either hold our existing position, and if it crosses above the 20-month EMA, then you can initiate a new position. So we only look at that price on the last trading day of the month. We ignore all other trading days. So it literally only takes 10 minutes a month to check the price trend when you're using a system, and you can instantly tell once you look at the 1-month price in relation to the 20-month EMA, you can instantly tell whether that stock is a buy or a sell. So a very simple system, and it doesn't take much time to implement it. So again, we get a buy signal if the 1 month price is above the 20-month EMA on the last trading day of the month. And we get a sell signal if the 1 month price is below the 20-month EMA on the last trading day of the month. And we just simply ignore all other trading days. So as trend followers, we know that the price movement of a stock reflects all the known information about a company. So we simply follow that price movement. All the information that's known about that company is reflected in the stock price. So we simply use the major trend system to follow that stock price. And the 1 month, 20-month EMA indicators can be downloaded from stockcharts.com. And you need the basic subscription for that. I think that's $15 a month, the last time I checked. So you can easily, just bookmark these indicators, and it only takes literally less than a minute just to see if a stock is on a buy or sell signal. So here, let's look at an actual buy signal. This is for NiSource. This is the gas utility company. And this blue line right here is the 20-month exponential moving average right here. And this line here is the monthly price movement of NiSource stock. So this price right here is the price of the stock on the last trading day in May. This price is the price of the stock the last trading day in June, July, August, etc. So we can see back in July that the price, the 1 month price of NiSource on that last trading day was below this 20-month exponential moving average. So we don't do anything if it's below that 20-month exponential moving average. But we can see the following month, in August, the last trading day, the price of NiSource was above this 20-month EMA. So that indicated that NiSource was back on a buy signal, and as long as the price remains above the 20-month EMA, then that stock is on a buy signal. So this is an example of a buy signal for NiSource. Here's a shorter term price trend. This is the monthly price movement here. These red and black lines, these are the monthly price movement of NiSource. Here's the 20-month EMA. So we can see back in 2009, it went on a buy signal, and that was, that was August of 2009. This stock went on a buy signal right here at around $4, and we can see that since then, the total return for this stock since this buy signal has been 468%. So that's a pretty good return for a stock with low volatility. You can see there were no sell signals since this buy signal. Just a very steady price increase in the stock. It goes from the lower left corner to the upper right corner with low volatility, but at the same time, you're getting a great return. So our theory is, why focus on high beta stocks, growth stocks that you can easily get stopped out of, when you can simply follow the major trend for these stocks that have low volatility and at the same time produce a good return. So that's a great looking chart. No reason to trade other risky stocks when you can get that kind of a return from such a low risk utility stock. So when we get a buy signal for a stock, we can either buy the stock or we can buy the call option on the stock. And let's look at an example of a sell signal. This was for American Express, and we can see this is the monthly price movement of American Express, the black and red lines. And we can see in January of 2015, so this was over a year ago, we can see that the monthly price closed above the 20-month EMA, right around the $77.50 area, somewhere in between here. So what that was saying at that time was that American Express is in a price downtrend and it should be sold. So, you know, if you're following the major trend, you can see you saved yourself from a lot of pain by just simply exiting when the major trend turned bearish, which was the last trading day in January of 2015. And you can see where the stock's trading now, and you know that saved you a lot of pain, and it allowed you to take profits if you were long, and it allowed you to take profits way up here instead of riding this down. So this is an example of a sell signal for the major trend system. So again, when you use trend following, when you use a trend following system, it allows you to make informed decisions. You just simply follow the system, and then you don't have to do any emotional decision making. So we'd much rather just follow the system than try to guess where a market is going to go. So we've been using trend following successfully for 30 years. Okay, and we use the major trend system to identify what we call super stocks, and super stocks have consistent and predictable price patterns. They've had a steady price increase over the past 20 years. They have low volatility. They outperform the major stock market indexes, and they have a low number of sell signals. So we call these super stocks, and we like to trade these kind of stocks rather than stocks that have erratic and unpredictable price patterns, and you have no idea what they're going to do next. So we've done much better just simply trading these kind of stocks, these low volatility stocks. Here's a super stock example. This is for Starbucks, and this is a 10-year chart, and this blue line right here is the 20-month exponential moving average. The black and red line is the 1-month price on the last trading day of the month. And we can see with Starbucks, it went long back in 2009. It looks like around June of 2009, and it's been on a buy signal ever since. And the 10-year return, total return for Starbucks is 283% versus a 10-year total return for the S&P 500 of 94%. So, and this includes the dividends for the SPY. So, the total return on the S&P index was 94% over the last 10 years versus 283% for Starbucks. So we like to trade these stocks that way outperform the major averages with a lot less risk and volatility. So this is an example of a super stock. Here's another one, TJX. We've been trading this for many, many years, and it's had it got a buy signal back here. It looks like around March of 2009. And it's been on a buy signal ever since. This is the retail store, and you can see again, you know, way outperformed the S&P, the total return, and very low volatility, very few sell signals. So with this kind of stock, you're going to have a much higher probability of being successful and not getting stopped out of your position like you would with a more volatile, risky stock. Here's another example. This is Reynolds American. Again, it went long in mid 2009. It's been on a buy signal ever since with a 239% return. And here's another example. This is Extra Storage. This is a real estate investment trust, and 10-year total return on this has been 284% versus 94% for the S&P. So these are the kind of stocks that we like to trade. Here's one more, Hormel Foods. Again, very low volatility, but a high rate of return. So these are examples of super stocks that, that pay dividends and have very reliable price patterns. So super stocks have actually outperformed most growth stocks with a lot less volatility and risk. And there's no need to trade these high volatile stocks and incur a lot of risk when you can trade super stocks. Now, let's look at some charts of the types of stocks we like to avoid. This first one is First Solar. You can see a lot of volatility, a lot of sell signals in here. And when you look at a chart like this, you just don't know where this stock is going next. So, you want to avoid this kind of stock. Here's a price chart for Sotheby's, and again, a lot of volatility, a lot of sell signals, no clear, predictable price patterns with these kind of stocks, so we just avoid these. This is actually the Chinese stock ETF, FXI, and you can see if you try to trade this, you're really going to get chopped up. So no clear trend here, very unpredictable price pattern. Here's another example. This is for Sony. And this is Corning Glassworks here and Caterpillar. So, yeah, there's no reason to trade stocks like this when you can trade super stocks with a lot less risk and a lot less volatility and a much higher return.